very special guest joining us this morning. Mohit Gang is here with us. Mohit Gang, co-founder and CEO, Moneyfront. Thank you so much for taking the time and being here with us this Tuesday morning on News 9 after a long time. Good to see you. Help us understand what's the mood of the market today. Why are we seeing banking stocks in pressure, especially ICICI Bank and HDFC Bank?
Thank you so much, Karthik. Always good to be talking to you. Yes, and I was off for a little while. But look, I think markets have no reason this morning either ways, right? So I think all that markets are looking for is a headline from US and China trade talks, which isn't coming so easily. And I think there are some tough negotiations happening there. So there is no real trigger for the markets. We had a trigger in the policy meet, which played out over the last 2 days, and that played out primarily in the NBFCs and finance companies and maybe capital market plays and so on and so forth. For banks per se, a rate cut is always not so positive, right? Because the loans get repriced immediately and the deposits aren't priced so quickly and so efficiently. So typically, I think that's at a very high level though. But yes, for banks, there is no positive trigger right now. And as I said, for the markets per se, there isn't any positive trigger. We are now looking forward this year, perhaps to some news on the monsoon front, which isn't looking bad, which should ideally be positive. The inflation projections are pretty neat as given by RBI, sub 4%, so which is also looking very attractive. I think the GDP growth rate, the GST collections, all those macro parameters look good. And typically, I think markets just need a trigger now, my sense is. And the rate cuts plus the tax benefits which were doled out in the budget, both should play out now in Q2 and Q3 of this financial year. So my sense is we should keep a look at the mid caps now that the larger play on the Nifty top heavyweight stocks has got played out to a fairly large extent. I think we need to keep an eye on the mid caps because all these are extremely positive triggers for the mid cap basket per se. So I'm hopeful and I'm watching for few triggers, Karthik.
All right, let's see when those triggers really come in. But that's an important headline you're giving, that mid-cap is the space to watch out for, because perhaps the Nifty 50 stocks, the large caps, have been played out already in the market. But coming back to the triggers, Mohit, that we are expecting, and of course, day 2 of the meeting between US and China in London on potential trade talks, trade negotiations, should come up with some outcome today. Now, if that outcome is positive for US and China both, what is the likely impact going to be on India?
Karthik, look, I'm very hopeful that the talks which are going on, the outcome will be positive, right?
Okay.
Both the countries need each other. They need it desperately, right? The US needs the rare earths and the Chinese needs the tech. So there isn't any way out for both the countries. And I'm sure that from whatever it is, at whatever level we are standing today, from that level, looking forward, it will be definitely positive. Now, the impact and the extent and the magnitude is what the markets will have to gauge once the outcome comes out. My sense is one should brace up. And clearly, the global headlines are looking much more conducive as we are sitting today. I think from a US China trade war perspective and from a macro perspective domestically, I think both the triggers are just waiting to burst out of this rim. And my sense is investors will be, it'll augur well for investors if they are well positioned in the market right now. I think there is no sense of keeping out of the markets at this juncture. One has to be in the market and play out as and when the rally comes.
All right. Since you did mention the trade negotiations between US and China and the fact that rare earth elements is likely to be discussed threadbare, if not earth bare, I'm also looking at auto stocks this morning. Not too much fear seems to be emanating from this export curb that China had put in the month of April. In fact, Maruti, Mahindra, Tata Motors are all quite comfortably in the green this morning, hoping for a positive outcome. And do you believe that perhaps that outcome could be positive only for the US and countries and companies in India, for example, could still be struggling for China's export curbs to be eased?
It's a tricky thing to call out, Karthik. Honestly, I honestly can't assess as of now as to what companies will get impacted in India and to what extent. US definitely will have an impact, and the whole reason why China is doing is to impact US and not the other parts. My sense is the supply chains will find its way out, and perhaps India might not be impacted to a large extent. In fact, I foresee negligible impact on the Indian markets per se. My sense is for the auto basket as a whole, I think the rate cut was a good positive trigger. It augurs very well for the entire auto basket. They were extremely well priced though, and perhaps the rate cut could bring in a new level and a new rally out in the auto stocks in times to come. If obviously the Chinese news flow remains positive.
All right. The news flow does look hopefully to remain positive. Meanwhile, I'm also looking at the IT stocks and good momentum on IT stocks this morning, Mohit. Again, directly linked to what is happening in the US, or are there other triggers? Because, of course, we've seen the job data has been fairly okay in the US, and the possibility of a rate cut, therefore, gets pushed even further, doesn't it?
Look, I think from an IT perspective, it's imperative that the US as an economy and as a country does well. And my sense is what the IT sector or the IT pack is factoring in currently is that US-China trade war will see the relationships between the two countries again back to normalcy, and perhaps that would mean that companies will start spending, and perhaps the IT sector will find its clientele and the markets back. But I think there are two perhaps and too many ifs out there. My sense is, as of now, I would stay away from the IT pack, Karthik. I think it's had its share of run up in last 2 years,
Okay.
and until and unless we have extreme clarity on the rate cuts, which we don't have in US right now, and we have a clarity on how the US economy is coming back on tracks and how the companies are likely to spend further, I would stay away from the IT pack as of now.
All right, stay away from the IT pack, but staying with technology now. Mohit, Elon Musk's Starlink is set to launch its satellite internet services in India, and likely in the next 2 months or so after it got the license from the Department of Telecommunications. Now, Starlink therefore becomes the third player in India after Bharti's OneWeb and Reliance Jio to get the green light for satellite-based internet in the country. Now, as part of this rollout, what we are reading, Mohit, right now is that Starlink will offer a 1-month free trial with each device, and that device is quite exorbitantly priced at about 33,000 rupees. And also, the monthly unlimited data cost for the users will reportedly be as high as 3,000 rupees. Now, putting that in context, Mohit, does it really come across to you as Starlink being a real threat to Bharti Airtel, Reliance Jio with such pricing, and perhaps the use case for satellite-based internet still, as we understand, being restricted only to remote rural areas where penetration of broadband has not really happened as it has in the rest of the country? Do you see Starlink emerging as a real threat to Reliance Jio and Bharti Airtel? Because Bharti Airtel stocks are down about 0.5% or so again in trade this morning.
Look, Karthik, in a country like India, which is extremely cost sensitive and rate sensitive, I think the data prices, if you see in India, are the lowest across the world, honestly. And to compete at that level, it would require a different kind of localized strategy from Starlink, unless they come out with a plan that they're only catering to a particular segment in India or to a particular kind of clientele. And I think that's not a bad strategy, honestly, to start the foray. And they could figure out whether they really want to get into the hinterlands and they really want to get into the tier 2, tier 3 market segments with an extremely price competitive, price sensitive dynamics. So my sense is the market is large enough, it's
Okay.
massive enough for 2, 3, or even 4 players to survive together.
Okay.
Right, and I don't think so. As of now, we need to fear on Geo or Bharti Airtel. I think they
Sure.
are well-established players in the market with extremely healthy market shares to both of them.
Right.
And to chip away market share with this kind of a pricing, I don't think so. Honestly, that's happening easily for Starlink.
All right. Well, Mohit, thank you so much for your input, not just on the markets, but also on what we are likely to see in India's telecom space. Thank you so much. Pleasure having you with us right here on News 9.
Thank you. Always a pleasure.